Hey folks, Dan Frio here with your closing bell for September 23rd, 2025. So really the only thing relevant in today's world that's really going to affect these things today is when Federal Chairman Powell speaks. Well, Federal Chairman Powell spoke today, and I'm going to show you two clips. And it's actually a commentator on CNBC kind of just giving us the focal points of what he was talking about. And he talks about tariffs possibly being a one-off. Then he's also going to dive into the unemployment numbers. Then we're going to go over to Chicago Fed President Goolsbee. We're going to get his take on what happened at the meeting last week, and does he think rates are too high or too low? Where did he vote on the pendulum of if rates are going to be cut in the future? So if you're watching this video, you're trying to figure out where those are going, and my goal here is to try to help you understand what's going on with mortgage rates and the whys behind it. So without further ado, folks, let's get to today's news. So here's what we're seeing in the economic calendar for today. There was really nothing. Well, this would have been something if they didn't come on point. So we got the manufacturing and servicing PMI today, and they both came in kind of right as what it was expected. We had the economists forecasting the manufacturing would come in at 52.2. It came in at 52. And then we had the servicing was supposed to come in at 54. It came in at 53.9. So this had nothing to do with the markets today. Here's what really transpired today. Federal Chairman Powell spoke, and but we're going to look at that in a second. But what we have the rest of the week, Wednesday, there's nothing really. New home sales. I think this is going to be a bad number. I could be wrong. I hope I'm wrong, but this number I don't think it's going to meet up to expectations, and the markets might be a little bit shocked at that, but I wouldn't be. But then on Thursday and Friday, this is when the guts of the data comes in that the Federal Reserve focuses in on and the markets focus in on to figure out what's going on with rates. So what they're going to look at is durable goods orders. How robust is our economy right now? GDP is going to play a role in that. Is it positive? Well, it was 3.3 last time, and they're expecting it to stay there now. And then we're going to get initial jobless claims and then continued claims. That's going to give us a reading on the employment numbers because that's the number one piece that the Federal Reserve's most focused on. And then we're going to get existing home sales. I think those are going to be okay. Where I think it's going to get the biggest hit is new home sales. But then on Friday, we're going to get that inflation number, the number one inflation number the Federal Reserve puts the most weight in. But here's what I want to show you today. Mortgage rates on this is showing that they were up. But then when I go over to here, I don't really have an explanation for you guys because the MBS chart right through here is showing up 16. So usually that means that mortgage rates would come down about an eighth or at least 0.05. It's showing that they're up today. So I don't know if that was a lag in the system or what's going on there, but the bond market's telling us right now that mortgage rates eased just a little bit or at least stayed steady is what I'd help you say. So let's get over to the first piece of this puzzle is Federal Chairman Powell speaking on the jobs numbers. Now, this is what CNBC has to say about it, but they also mentioned tariffs in this. So let's listen and see what they have to say.
Let's bring in Eamon Javers for some more reaction. And Eamon, he did underscore the notion that he talked about last week in terms of there not being a risk-free path and also the Fed's stance on tariffs being sort of an isolated event.
Yeah, that's right, Melissa. He called it a challenging task for the Fed to deal with both inflation and unemployment, which are both going in the wrong direction potentially right now simultaneously. And so how do you deal with that as the Federal Reserve Chair? But some of the policy analysts who watch the Fed very closely are already out with notes saying that there's not much here that's new that we didn't hear in the press conference last week. You know, Melissa, I was struck by a couple of things in the Q&A portion of this conference. One is this extensive conversation about AI. So much of the market now focused on these massive investments that we're seeing in AI. And Powell here sort of revealing his thoughts about AI and saying that he's not willing to say that it's going to be a totally world-transforming revolutionary technology. He said it's very early days at this point. He did sort of align himself a little bit with the techno-optimists who are saying, you know, look, as AI destroys jobs, of course, it's going to create new categories of jobs that we can't even imagine right now. So that's something to watch for. But he sort of ended up as an agnostic on AI and its impact on the labor market, saying, I don't think we know yet. We're going to have to see how this evolves. He did say that the job creation has dropped really sharply. He said he thinks that's in part due to policy uncertainty, perhaps around tariffs, but also this effect that we're seeing among young people coming out of school that may be impacted by AI. He said he called this, Melissa, a low fire, low hire economy, which I thought was interesting.
The biggest key point of that was when Melissa first started this. I don't know if you caught it, but let's watch it again. Here's the take out of what Federal Chairman Powell said today, and this was intriguing to me.
Let's bring in Eamon Javers for some more reaction. And Eamon, he did underscore the notion that he talked about last week in terms of there not being a risk-free path, and also the Fed's stance on tariffs being sort of an isolated event.
And I heard that firsthand on today's conference. So he did come out and I was like, whoa, that's a shocker, because they said, a lot of people were saying, okay, tariffs are going to be inflationary and it's just going to keep going and going and going. Federal Chairman Powell said today it's usually a one time, but like I've been saying over the last couple weeks, it's drawn out now because we had a lot of people or a lot of countries, the tariffs getting the kick down the road. Like China, we still don't have an agreement with China yet. So when it does come into play, then that'll come into play and that will be a little more inflationary. But we didn't have that big spike that a lot of people thought. Now, the other piece of the puzzle I want to go over is this right through here. This is Goolsbee. He's our Fed president here in Chicago. And I cut out some of this because they were just dialoguing back and forth with CNBC, and it's about a 15-minute video. But I want to show you just a couple clippets in here. This is the biggest take that I want you guys to understand from this interview. So let's get over to here. And then when we're going to come back, I'm going to show you market reaction to all this, and then what my expectations are over the rest of the week, because I won't be here. I'll be here with the opening bell on Thursday to let you guys know how a lot of these numbers did come in and how the markets are reacting. And then I'm going to go be spending some time with my mother, so I will be back the following Monday. My whole team will be intact. Everybody's here taking loans and applications, and we're here for you. But I just have to take care of some family matters, and your prayers are more than welcome. So let's get over to Federal Chairman, no, not Fed Chairman, but Goolsbee, and get his take on where tariffs are and where the Federal Reserve stands at this point.
Okay, because I think I might have. I was just asking a question. I wasn't saying you're doing. Are we still? Okay. Can you tell me that we're still in restrictive mode, or do we need to wait and see?
If we're still in restrictive mode, or we need to wait and see. I think a little of both. I think we are restrictive, mildly restrictive. It's worth noting, if you hold the rate at some level.
Okay, so I got to stop it there, and I usually try not to stop it. He said mildly restrictive, but I want to wait for you to wait for the end of this and see how far down he's thinking cuts are going to go. And it's a lot further down than mildly restrictive. Let's get back to him.
And inflation creeps up, you're passive cutting. So I don't see that the real rate is as restrictive as it was before we started getting this inflation. But I still think in the period before April 2nd, before we started getting some of these shocks, I thought we were on the rate down. As inflation comes down to 2%, we could still go down a fair amount with the rate. What's neutral, I think, is below where we are now by 100, 125 basis points, something like that.
So that's what I want to show you guys. When he came out, he says we're a little restrictive, and then he said we're about 100 to 150 basis points restrictive. That's a lot. That's more than just a little bit. So that's the data we got today. You can see it's a little confusing. So again, when you go back to rates, shows on this one, rates went up. And then if you go over to the bond market's still open, folks, and the bond market's still ticking up. So what you have to understand, if you're new to the channel, is we follow this right through here, this bond. This is a mortgage bond. If you check at the top, it says MBS. So it's mortgage-backed security. So how you understand where rates are going when you're looking at this chart is this is the price of the bond. So if the price is going up, well, rates are coming down. There's an inverse or a flip-flop effect. The bigger the adjustment, well, the bigger the adjustment in the rate. So that's what we saw today. So mortgage rates, if anything, they were just flat, let's say, for the day. So let's go over and see what the stock market did for today. It didn't really do all that great. Chairman Powell didn't do it a favor today because he said, one of his comments were, it might be on here, S&P closes lower, snapping 3-day winning streak. As AI trade and NVIDIA fizzles, Powell hints, and it says stocks seem fairly highly valued. So he's saying the stock market's a little over frothy right now. So you're seeing the stock market kind of all the way across here in the red. That's the reverse of a Cinderella story. We have the VIX up to 16. That's not that high. The teens were okay. Let's get to oil. Oil's up, and then we got cryptocurrency is down. It's a terrible day, folks. It's everything but a Cinderella story. And what I talk about each day when we talk about this is when the Dow Jones, all the indices through here are green. most people, when they buy stock, they buy it long, meaning if the stock goes up, you make money. You can make money in stocks if you short it, meaning if you short a stock and it goes down, you actually make money there. So check out my Stock Talk Tuesday, where I try to educate you guys on stocks, bonds, cryptocurrency, and how to invest. Today, we talked about how are things powering the AI system. So we started talking about nuclear stocks and ETFs, and one of the stocks we picked about 6 months ago, it's up over 100% in 6 months, and it's a nuclear play. Check out my Stock Talk Tuesday. I'll put that clipping right up through there. So we got stocks down considerably today. It's down. You go over to the bond market. What's the bond market doing? And it's up. So not a bad day for bonds. Not a good day for stocks. But what's the rest of the week going to tell us? Well, let's go back and recap again. Tomorrow, we really don't have much coming in. New home sales. So that's not really anything there. So I'll give you a feedback tomorrow in the morning and my closing bell and where I think a lot of these numbers on Thursday are going to come in. But right through here, here's what we want to look at. This is what the Federal Reserve watches. And this week, we're going to get the PCE number coming in on Friday. We're going to get unemployment numbers. Well, the unemployment claims coming in Thursday. That'll give us a hint of kind of what's going on with here. And we are also getting GDP numbers this week as well. So a lot of these gaps are going to get filled in. If we go over to the FedWatch tool, this is going to tell us what the Federal Reserve's most likely going to do in 35 days when they meet again. We scroll down through that, and that is telling us, let's hit probability, and that is telling us it's even going up higher. There's a 95% probability now the Federal Reserve is going to cut rates. How do I know? Well, that's what this chart's telling us. Basically, you go to the CME FedWatch tool, crossed here. This is where they're predicting the federal funds rate to be. Down through here are the meetings. So at the October 29th meeting, they're saying there's a 95% chance the federal funds rate will be at 3.75 to 4. Where is it now? Well, it's at 4 to 4.25. That means there'll be a cut. And if you look at the dot plot, and I'll do this again tomorrow morning, most of the candidates from the Federal Reserve is saying there's probably at least one, maybe two more rate cuts coming in. But as you guys know, if you follow me daily, just because the Fed cuts rates doesn't mean mortgage rates are going to go down. So today, mortgage rates, I'll just say stay stagnant because the closing bell on bonds were up just a tad at 16, so that should take away that -2. So let's just say mortgage rates were flat on the day. What are they going to do tomorrow? Well, stay tuned and join me tomorrow morning at the opening bell so you can figure that out. So who am I and what do I do? So my name is Dan Frio, and I do these videos each day to help inform you guys what's going on with these and the whys behind it. And the reason why you're watching this video probably is you're looking to buy or refinance. I'd love to be able to help. Folks, I've been doing this for over 35 years. I work at a bank that provides me a federal license. So no matter where you live in the country, as well as Puerto Rico, I'd love to be able to help you out. We have a slogan here. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. So how do we do that and why do we do it? Well, let me ask you this. When you call in, what are you looking for? The first question is, what's your rate and what's your fees? So we want to be able to offer you a whole abundance of quotes. So what we've done at the bank is we've set ourselves up with over 30 other lenders to be able to use their loans, products, their rates, their fee structures, and everything. So if they have a better product than I do here at the bank, well, I can basically act as a representative for them and put your loan with them. So that's what we do. Each Wednesday, we come out and show you guys how we do this. How do we compare your loan with over 30 different lenders? Join me live tomorrow. Me and Alan will be live, and join us and give us, what your situation is. We need your credit score, what your house value is, and some other data. We'll be able to show you live on screen exactly how we compare your loan to over 30 different lenders. So if you want some assistance from us, just go out to the rateupdate.com. If you're looking to buy a house, folks, I have to inform you of this program. If you're looking for some down payment assistance, even if you're not, this might be a program that help you out. You might qualify for up to $7,000 in assistance if you're looking to buy a house. The benefit of this program is it's not a lien. You don't have to pay it back. So if you ever go to refinance down the road, you don't have to add this lien into that refinance, because if this is a loan, you're going to have to add that when you refinance. It's a little confusing. I get it. But here's what would happen if you refinance and you had a down payment loan. You have to pay off your current loan plus that down payment loan. That might even exceed the value of your property. Not that the property value went down. It's because you got a really good or a lot of money on the down payment assistance program. So check that out. And if you're looking to refinance, we have a whole bunch of other tools up here for you as well. So thanks for watching today, folks. I greatly appreciate it. God bless. Be safe out there. And I'll see you tomorrow morning at the opening bell. Take care, folks. Bye-bye.